Good morning, traders. Welcome to another Flow Show. We write Wednesday, 13th of August, 2025, and the markets have been on the move. Maybe not exactly to the direction where we immediately expected after those CPI data. But there's some very interesting moves going on there. But before we start going into the thick of things, just a reminder that we are still running our cool discount, 40% discount on your monthly subscriptions. You can still enjoy that while the summer heat lasts. I'm not sure when this will end, but it won't be forever. So take advantage. For those who are not yet in our trading community, you should take advantage of this. Also, we still have a TFP prize running and also a free coaching session with one of our coaches. If you sign up for the newsletter, only need to do it once you're on the newsletter. No need to repeat the action. You will be enlisted on whatever goodies may come your way if you are selected. So you just have to put your name, your email address on here, press this big yellow orangey button, and you will be on our lists and just get also made aware of all the changes that are coming in our community when we will evolve from Forex analytics into trading analytics. That for the traders. Now, what has been going on in those markets? Before we run into the data and what is to come, a couple of other headlines. On purposely today, I didn't overload this section because really it's what's been going on the dollar and yields and rates and etc. That's been the main driver of the market. But there has been a couple of other things going on. On the geopolitical front, we know that this meeting is planned for Friday in Alaska between Trump, Putin, and perhaps Zelensky. In the meantime, Zelensky already said where the original US Russia plan would have been to grant Russia gained territory. Zelensky said that that was a bit of a no-go, and he at least would not give up the Donbass region. Um, Also, the drones are still flying, and I suppose that if we don't get anything of a serious framework around at least an air truce out of this meeting, they will unfortunately continue to fly. So that is still ongoing, still very fluid situation. Although talks are planned, we don't know exactly how much they will be able to decide over there at all. Elsewhere, China decided to hit Canadian canola shipments with a whopping 76% tariff. Need to know that these shipments to China, China being obviously a massive market, is not going to be helping or making the Canadian farmers happy at all. So just be aware of that. It may be one of those reasons why the Canadian dollar is not enjoying the dollar decline that we see mostly versus the other currencies. And so this now is adding to actually the pressure on Canada, because where it is still very uncertain what is going to happen with the U.S. trade relationship. If you add China, sorry, in the mix, that is not really a brilliant picture. So for those who trade Canadian dollar, keep that in mind. Maybe not specifically first as the dollar, seen the underperformance of the dollar, but take a look at on Canadian crosses perhaps, if those are on the move. And as a matter of fact, most of those crosses uh, have seen the Canadian dollar on a relatively weak footing. Um, ECB's Nagel was out, and we were all a bit surprised because we thought he would have been on holiday, but he says that the rates are at a good level and ECB can be patient and, of course, flexible as well, depending on the data. But he's just confirming that the rates at the ECB are in a good place. We also had Bullet out yesterday and throwing his hat in the ring, but that will be a no-go, we think, straight away, because he said that he will take the Fed chair if he follows the goal for low stable inflation and respects the Fed independence. So that's the first one. And then the line that's probably ruled him out for to become the next Fed chair is that he said that he sees 100 BPs from actual interest rates only are needed to get to neutral. So where Mr. Trump would like rates to go a lot lower, 100 BPs won't probably suffice to put him on the list. And talking about that list, Politico yesterday came out with an article, and it seems that they are adding names every day to the list of potential candidates, getting a bit too long to list all of them. Most of them can be understood as being doves, obviously. But adding to that list is just also adding probably to the time that it's going to take to choose a new Fed chair. And talking about the Fed chair, yesterday, Mr. Trump found it necessary again to send a few skirts out Powell's direction. He's now threatening or weighing to a lawsuit against Powell over those Fed renovations, saying where the thing should have costed like $50 million, it costed three and a half or so $1 billion. But we all know. That this story has been going on for quite a while. Just to take away from the how shall I say, people who would go a bit too gung ho on saying that's it, Powell is gone before that thing would even go to court. Powell's tenure ending in May next year, that would already be over before that even would hit any of the courtrooms. So I don't think that this will come into the equation, but just the pressure is on. By the way, Trump came up with another musings in regards to Goldman Sachs CEO Solomon. He said that he should um, just take care of his DJ of his DJing instead of running one of the big banks. That is, of course, because Goldman Sachs refused to open fresh accounts for a convicted felon, shall we say? So that was the a bit of the musings that Trump was sending around yesterday, and his choice to replace Kugler temporarily at the Fed. Um, he was out as well with a statement, a lot of blah blah blah, but then he repeated something which is actually quite interesting coming from himself, is that he's valuing the Fed's independence. So is he really going to take the seat, for one? And secondly, where there was so much noise made before, and I spoke about it in our chat room yesterday as well, if you compare it to people who will be, or have been in central bank seats, it's always very nice to make a lot of noise before and after. But when they actually take the seat, they kind of mostly walk the line. So Miran here, he's probably sown a little bit of doubt into Trump's mind whether it's really a good thing to for him to be really there, but we will see that. Um, okay, let's get straight away into the CPI data that we had yesterday, and where there was a lot of dare I say, confusion or back and forth is because we had the core CPI running hotter, and we know that the core CPI is something that is really on top of the Fed's list as well. But the headline CPI came in at the same rate where it was the last time, so not ticking up there at all. Um, Month on month also coming in slightly lower than last month as well. So we had a bit of up and down in the dollar yesterday. Um, kind of stabilizing at some point, but already showing signs that the market is actually still recalling that jobs report that we had partly, and then all of a sudden, helped by some facts that I will talk about. Um, all of a sudden started to really rather lean on the dollar instead of continuing to buy it. We saw interest rates first of all tick up a little bit, but then just stabilizing and slightly starting to slip. And then we had this very strange Bloomberg rehashing or retweeting whatever. There was this line about the from EJ and Tony, who is replacing the lady that Trump fired from the Bureau of Labor Statistics, and he was kind of suggesting to suspend the monthly jobs report. And that, well, actually, that line was taken from a Bloomberg article and then reported by Fox Business, and a lot of confusion came around, and the dollar got a bit of a slap around the ears because that clearly is not for the likings of investors, and that is weighing on the confidence that investors may have not only in the data, but imagine that we get less data. I mean, how can you have confidence in the reliability of even the country, really, right? But then, as I said, there was a lot of confusion because this line has been taken out of context and um, was apparently a line that he used when he was applying for the job. So quite a while ago, or at least a few weeks back. But the dollar didn't really look back, and it's probably helped as well by two things that happened afterwards. There was, first of all, we had the BlackRock CIO, also reader. He's quite vocal, this guy, and he said that actually the CPI should give the Fed the justification to cut for 50 BPs in September, which is a bit bizarre because if you look at the core CPI, it came in a little bit hotter. Obviously, a lot of calls are that this is going to be just a temporary one, etc., etc. But still, this came in a little bit hotter. But clearly, some of the market participants as well, and some of those bigger names, they are clearly looking more now at the headline CPI and globing really everything. Okay, and then thinking back, as I said, to this to the jobs report, and then later in the day, Besant also came out in an article. Obviously, he's towing Trump's line as well for rate cuts, but he also said that the FOMC should consider a 50 bps rate cut in September. Obviously, a lot of talk, chats, but if you look at what the dollar has done overnight, it hasn't gone completely unnoticed. Okay, so we do have to take those things into account. As we already said, it's very hard to really have one line in what we trade, etc. But it is true that correlations tend to change, evolve, or at least temporarily, right? And yesterday was kind of a prime example of that, because the rest of the Fed speakers yesterday, Barkin didn't say too much, but then Schmidt, who is a bit of a hawk, let's say, he said that the Fed should be patient, which is still, for up to now, still has been Powers line as well. Okay, but it didn't impact yesterday the market at all. It already made up its mind. Okay. Um, what else have I noted down? Well, actually, not a lot. I think we are through those headlines and what has happened yesterday. I will, of course, go through all of this when we look at the rates. Let's just look at what happened later on and what is happening or what will happen today, which is not a lot, but tomorrow we have a big day. So we had a few Kiwi numbers, um, not really telling us too much, but it's these electronic card retail sales. They are up, but we will have to monitor that because we could say it's positive because it's driving up retail sales, but we need to be a bit careful that we don't trespass or pass above a certain threshold because what when they start to tap into the electronic cards too much, it may hint at some trouble down the road for the consumer. Okay, we had the Jap. Oh, here we go. What's happening now? Okay, we had the Japanese PPI out, a pretty volatile number, but lower than last month. Okay, as I said, I still think that the PPI is a bit more volatile. It is kind of an earlier number compared to the CPI, but it's more volatile number. I would classify it in the order of importance, well below the CPI. The Tankan came out a little bit better than last month as well. Then we went on to the Australian housing market numbers. Pretty decent, I would say. Nothing to get hung about here. The wage index is still remaining pretty high. Remember, on the RBA, Burlow going a little bit. Um, how shall I say, less hawkish on most things, but also pretty closely watching those wage numbers, and they could help the RBA to remain a bit more on the defensive for the coming rate cuts, or at least in a neutral zone. What else did we have? A very, very weak 5-year JGB auction. Yeah, rate a little bit higher. The auction was very weakest in years, if I read that correctly. So that also after a completely failed JGB market yesterday, which didn't trade at all, that should be keeping a bit of upward pressure on the Japanese yields as well. And Swedish unemployment rate ticking up a little bit. Just let me look quickly what's happening with the Swedish krona, which is absolutely, if you look at the crosses, nothing at all. Final data here. Um, Wholesale price index coming in a little bit lower in July. Could be a bit of those tariffs already in there, perhaps pushing prices actually in the exporters a little down maybe. The rest, nothing really to mention. Final numbers in Spain, moving on as well. What is to happen for the rest of the day? Well, we have not a lot. We do have the weekly mortgage data. We do have more speakers though. Barkin was already online yesterday, but I think we do have a few more speakers. Exactly. We have Wennerveen Goolsby later on, and then Bostic again, which he has already been speaking before. So let's move on. We do have the weekly oil inventories. They haven't moved the needle too much over the past reports, but we have to know that yesterday, where a small draw was expected on the API data, we did have a build again. Okay, I may have a quick look at oil actually today because it's really weak. It is really weak. All right, we will have the summary of the deliberation on the Bank of Canada. I'm not sure that we will get anything new from there before the next flow show tomorrow. We will have though an interesting night. Um, Do we already have those Australian employment data again? Can somebody confirm or inform? I have the impression we had them like literally just a couple of weeks ago, and already a new report. Okay, I thought we had them already. Those. I think that may be a bit of a mistake on the calendar. I need to confirm that maybe in our community. If anyone can confirm or infirm, I no, it says on different calendars that we have it. So I'm going to assume that we have this unemployment report as well. It's going to be uh, pretty important because we are trying to break some levels there as well. And then we have the Q2 GDP data out, but nevertheless, it's going to be interesting for the UK, obviously, especially that sterling has really picked up quite a bit of strength again of late. And then some more European data we do have, and I think that is going to be the final reading as well for the French CPI tomorrow. And then again, some GDP numbers. Okay, they all may have an impact, okay, those Q2 GDP numbers, but let's face it, we are August, right? So I think unless they come out far away from expectations, I would assume that the impact would be limited if it goes against the grain of the market, but may just be an accelerator if it confirms the direction that the market is trading already in. Okay, so I think that that's a bit of a, I'm not going to say like a trick or a tip or whatever everybody does with his her positions what they want, but just take it as a bit of a barometer for what's going on at that time in the market. Okay, maybe if you see just a small tick weaker, just as an example in those UK data, but when cable is still very big, for instance, it may give like a 20-30 pips setback, but then the market will realize that it's a Q2 number and probably just pick up again where it left right before. Okay. Okay, then let's see what those prices have been doing. So as I said yesterday, let me just go on a smaller one. So yesterday it was actually a as soon as the data came out, the market already went up in the euro dollar on the back of this on the back of the lower headline CPI. But then, as I said, we're trying actually to make out what really the number was really meaning. So we stabilized around here, but then probably helped by Besson, by all those commentators, etc. And also, as I said, the market reminding itself um, from that week jobs report, we just continue to sell dollars in the end. And I think you can see the top end here, right? So this the 2 year and the 10 year, they ticked up just a couple of BPs um, on the back of that core CPI, but then actually just stalled and then came back lower. Where can we get from here? I think it's there's also this thing about the data, what's going to happen with the data. Although I think it's really been taken out of context, I don't think that this is really going to be the case. But at least in the meantime, the market is really losing a bit of confidence again in whatever comes out of the US. So what's going to happen? I think on the euro dollar we are approaching an interesting zone. Remember, in the very long term, there is this 117.5 still to be reckoned with, and it is a bit of a crossroad of trend lines as well coming in there. So I would say don't dismiss this section here between 35 and 50 on the euro dollar. We are nearly there. We are trading 117, well, nearly 117.30 as we speak. So we are in a bit of a zone here. It can go higher. I'm still, my bias is still the same. And my overall bias is still gradually for a lower dollar as well. But we need to respect those levels, okay? But this seems pretty thorough, okay? We have this follow through from yesterday's move. We will see what's going to happen in the US session, but don't forget that we have, if you look at really what happened yesterday, we have broken already in the short term as well through this level. We were always talking about this 116.60, well, it has broken through, it has held on the retest, and now we are going higher. So any bigger setback today, I reckon it will find definitely buyers in this 116.67 zone, and then we will have to wait what's going to happen on tomorrow's data probably. Um, Tomorrow's data in US are the PPI data as well. We've got a bit of other stuff going on, but I think the next important one, take away all those meetings, etc., which will of course be a mover. But the next important one, and then we were talking about the consumer, is Friday's retail sales. I think Friday's retail sales could actually be a very good barometer as well. And let's not forget that next week Powell is going into Jackson Hole. We have the Jackson Hole meeting. If we get, and I'm not saying we will, but if we get a confirmation that potential tariffs or the front running with tariffs is completely open and we see a weak retail sales report on Friday, we may just get that hint next week in Jackson Hole that September is not going to say a done thing, but September is very much on the cards. And of course, the market will front run such kind of events and expectations. So we need to take all of that into account in addition to what we see on our charts, right? The trend lines and FIBs and etc. So I think here this zone is going to be relatively important. 117.35.50 if we push through 117.80, but then we could easily, I think, if we don't see anything changing, we could easily run up back to that prior high. And no, I'm going on to the 4 hours, otherwise it's not going to be clear. And we see the first extension here, even at 119.5. I think it's too early to call it, really too early to call it. I'm not saying we can't get there, but I think it's too early to call. I think by the time we will get up and we will see how the US is going to trade their own currency. And also, let's not forget that when each time you break levels here, we could see those momentum funds getting triggers and just adding fuel to the fire. I think today, if we get through there, we may see that run up. Okay, and I think the main support 116.60 around there. Cable, very, very interesting. As we were talking since a couple of sessions now, the sterling strength has started to reverse. Okay, sterling is doing much better than we actually anticipated for a start. But then I gradually went back over to that camp as well, and as well looking at what the dollar was doing. So I'm just overnight, one of my sleepless hours, I bought a few cable again. We are already through this 135, 30, 40 zone, which is a confluence of FIBs. It is the 61.8 of that 138, 131 move, okay, that comes in around 135, 40, 41, but we are already well through, and we are already close to challenge this 23rd of July high, which would be relatively important, I think, because if we get through there, I think we can easily knit another 70, 80 pips to the move and go and have a look at what's happening in the 136.5 zone. Is there fuel enough to this to run a lot higher? Well, we were discussing it yesterday, taken out of context or not. If the market loses confidence in a currency, well, in a country, and then per as a result in its currency, of course we can go a lot higher. We can go back into this thing, but on the data as such that we saw of late, is there a real reason to get up above this level? I may doubt just a little bit. So I think we can go up there, but there we need to really reflect on what we're doing. By the time we get up there, I'm going to have I would have taken most of the cable off, and then we reassess. We can still push higher, but then we reassess if we get there. Support on the day now. Well, what was resistance is already a support. 135, 30, 40, very easily. And I would say any move, let's say we get a failure or comment or something, and that would drive it back below there. This is where we tried to make up our mind yesterday in the cable around this 134.90, call it. I think there, if we get a failure, if not too much is changing, there for sure we will find buyers, I think, in current move. If we get back below this 134.90, I think then we are going to get back into a more rangy market. Um, Aussie and Kiwi, obviously interesting. We always talk about this 35.50 zone in the Aussie. Well, we're trying, and we are trying to push above now as well. This could go to up to, I think this one is a bit close here, this 65. I'm rather looking at what's going to happen around 65.80, perhaps even 66 the figure. Okay, we know last time we had an overshoot of it, and then we came back down relatively sharply, but look at this here, 65.90, 65.96, 97 I recall, another push here. 66 is probably going to be a tough little nut to crack again psychologically. If it goes though, it could mean that we push higher, okay, and that we're just going to try and get through to the high of this channel, or the upper trend line. Perhaps for the time being, it does look like we are building on that break. Now, obviously, we have done this and seen this movie already a good few times before. So we always have to reckon with what if, okay? So what if it fails? Well, the failure will be below 35 again, but I would just, for the sake of looking at all these little moves here, I would, for the sake of argument, add like 25.30 to it. Below 25.30, it's going to be we are going to be in the range again, and then probably a short-term longs will bail, and we get back down to 65, 64.85 perhaps, and then reassess. But for the time being, it's all looking pretty positive, and even the Kiwi this time is looking positive. Okay, we had this resistance around 59.70. We are through, and we are already very close to 60 the figure. The 50%, we're just trading above the 50% of this setback. So that's another positive. So now we are looking at levels 60-20, 60-40 perhaps. This is all possible. Um, unless US wakes up and starts to buy its own currency again, obviously, in which case we are going to have to look at how the market reacts to this 59.65.70, and perhaps if we completely fail 59.30 again. But again, if you look at all the dollar pairs in general, they are the dollar weaker, okay? It's all looking pretty constructive for the other side of the dollar pair. The only one, even though it's coming down, the only one not really responding right now is the dollar versus Canadian dollar. The thing is, as I mentioned before, there's still too much uncertainty about trade. Now China slapping those tariffs on canola exports is not a good picture either. So if you if you're looking at a Canadian, I wouldn't go as far as to buy dollar Canada also, but look at a cross, okay, and look at stuff like EuroCat, for instance. this thing has been really holding pretty well, and we're actually breaking those prior highs. We could argue that we are on a decent resistance right now, but we are. It's really pushing. You remember when I speak about sterling, you look at the strength of the sterling. You can measure it by looking at euro sterling. Well, I mean, if you look at the crosses, it is still, in my opinion, a very good measurement to see what a currency is actually looking like. Okay, and we can see here from this move that the mood for the Canadian dollar is not supportive. Okay, so I mean, if you're looking at trading dollars, perhaps your dollar CAD is not really the best thing if you want to be short dollars. Now, on the inversely, if the dollar all of a sudden stops and we're starting to reverse, then perhaps you could look at this dollar CAD and look, we have like a really nice few tops here over the past 24 hours or so around 137.80. If we start to get back above 137.80, we're probably going to move gradually up into the 138s again. But I mean, for me, it's not a preferred one right now, but I'm just wanting to show also why some currencies are responding to dollar moves and why others don't. Okay. Yesterday, a good few of us in our room were trying to trade the dollar yen. Actually, after the CPI, trading it to the long side of this 148 here. We did with a few nice tries up and down, a bit of jobbing, but then finally, when the dollar started to pick the reaction to pick the side, which is lower, I decided to go out. Just moved into euro yen, but euro yen isn't moving, so I just let that one go as well. Now we saw this one move lower, and then now a next one move lower. Late Asia, early Europe session as well. We are getting into support around here, give and take 147, 146.90, 147. It's could be a bit important because even though we traded below, you remember we traded below here 147 a number of times, but each time it got rejected this move below and we started to bounce. So again, 147. Look where we are. And I would say, look where we are towards the close of the day. If we are above or below this level, if we are below the 147, maybe those little spikes here, they're going to be filled and we could trade a bit lower. Okay. If not, I think we are going to be tightening the ranges even further. Because if the dollar stands up, yes, the dollar yen will have a bit of strength in it. But if the dollar stands up, is it not because of a little less risk or so? So I'm going to leave this one alone for now, but I'm not excluding this move to happen right now. Deresh, look at the gold and silver. Okay, gold. It has not participated in the move that we saw in the dollar for most of it. This morning, it shows more support, and it's coming back following the dollar move. But we have to see here over the past two sessions, we were starting to correct in gold. Yesterday, over the numbers, it did not participate really in the sell-off of the dollar. I think a bit of hopium maybe on what's going to happen towards the end of the week for the um, Russia UK Russia US Ukraine meeting. Sorry about it. Um, a bit of a lower headline inflation number perhaps as well, but it's just, I think the people are more feeling more confident in perhaps having silver in the books, not to the same extent because silver is a much smaller market than gold right now. But I did yesterday say that watch this whole zone here, and if you go back in time, okay, this whole 30, 33, 40, even you start from 40 down to 33.10, it's been like traded very heavily. and it could have been that we saw support over in that zone. I'm not going to go anything tighter than this right now. We could talk about those levels here, 33 and a quarter perhaps, but really it's this whole $30 zone here that we need to take into account, in my opinion. Um, so it held there. Obviously, with the dollar being lower, it didn't go lower. It's starting to rebound a bit. But again, here, 70, 75, it's your pivot again, right? If we start to get back higher, then I think back up to 34, 34.05, at that 34.10 perhaps. But we have seen that it has difficulties with this 34 level. If we get back up there, I still think that not a lot warrants to break above there for now. I am more thinking about sideways action right here and now, unless the dollar falls out of bed and then it's going to continue. I'm still much more constructive on silver, and 38 and a half is trying to give way. So this is positive, okay? The channel is one thing, but if you look even at this last move, we didn't get below the 38.2 and started to move higher again. It is positive. I think for as long as we are above, okay, 38 the figure, but here as well, 37.85, it is going to be positive, okay? And 38.80, why not even 39 and a half is on the cards in this move if this gets confirmed short term. Long term, and I just want to just repeat this one here. Long term, I still think that we are gradually on our way. It's not going to be a one-way ticket as we see, okay? But we are gradually on our way to somewhere around this 41 and a half. This is still where I think longer term we are on our way to, okay? Yes, Angela, absolutely above 34 in confirmation in gold, we would be looking at those July highs. There's no doubt about it. I think I said that I was going to. No, I was going to look at oil, wasn't I? Look at oil. Okay, we are back into, and I'm going on a bit of a wider one here. Look at this green line here. Okay, that green line is an important one for me, and we are really closing in here. Okay, we could not hold just around 64, 65. I need to clean up my chart, I know. But we are now closing in on this 61 and a half, 62 again. Look, we have been below, okay, but I think it is still key, because even if you look at it on a daily, from a daily point of view, when we went back up, we tested it, and it has been traded around. Maybe you can add just low 61s there, but this is going to be key. If that can't hold, then we could actually see those prior lows back in the 55 zone. Okay, global picture is still unchanged. Global picture is still unchanged. Look, since the start of the Ukrainian war, we have seen in the longer term constantly the same thing: high, lower high, lower high, lower high, lower high, lower high. You just constantly. And the big moves I'm talking about, okay? I'm not talking about those intraday spikes, etc. I'm talking about the bigger moves, okay? That has not changed so far. So for me, in the long term, it's still not bullish, okay? I mean, you wanna play the bullish side, know that you need to take profits, okay? If you're on the bearish side of things, just look at this longer term thing, and it should still be comforting you, okay? Unless we start to break this channel here, and then the party will probably be over for all bears. But for as long as that lasts, I'm looking at it quite from negative side still, okay? What's happening in dollar mix? Oh, well, we're back testing that level. I'm just looking at the dailies, okay? There's still bid coming in ahead of 1850. It's still actually left untested 1850. because it held this 38.2 here around 51.5, 52. But if you look at one bounce, two bounces, another bounce, and we're back here. Okay, if the picture in the dollar doesn't change, and I really think we can go have a look at what's happening here, maybe around 1818. I'm not saying that we are going in a straight line down to 1783, but if we get through 1850, I think some people will have some triggers perhaps to sell again. People who are trading against the 1850 may get out. Again, it may not go. It may have like a blip below. Sorry, it may have like a blip below and then bounce. I need to go back into the. It may have a blip below and then bounce. Just do a stop run, but it does appear to me that we're going to have a thorough try of this 1850. If we would get a break and a rebound, it's probably because the rest of the dollars will also be doing a bit better. Okay, if the dollar in turn keeps on getting hammered, I think we may go and have a look down there. Ladies and gentlemen, thank you so much for being with me today. We'll do it again tomorrow. Ryan is off until the end of the week, as you know. So, I have done the loony, Ali. I've done the dollar cat, mate, and I've said why I'm not inclined to trade on dollar cat as such right now. So I will we will talk to each other again tomorrow. Thank you everybody for being with me. A domani.